Welcome back, my name is Arya and I don't waste your time, so let's get straight into it. Ladies and gentlemen, in today's video, we're going to be covering another victim of the AI narrative. Over the past roughly 2-3 years since the launch of ChatGPT, we've had non-stop chatter about high-quality businesses, high-quality tech businesses in particular, who have fallen victim to AI, or their business is under threat due to AI. This rapidly evolving technology, which I'm sure everybody has been keeping up with, is going to come along and just sweep away all their customers, get rid of the product that they've built over the past 30, 40 years in some cases, and that's the end of the story. That's the topic of today's video. Can AI actually kill Adobe? And so to kind of set the stage and go through what has happened. Obviously, we had the 2022 sell-off, where essentially all the tech companies fell by 50% or more, Adobe not being excluded from that sell-off. And then going into 2023, 2024, these tech companies have rallied and made new all-time highs. In the case of Adobe, it did join in the rally, but it never actually made new all-time highs. And over the course of the past, roughly year and a half or so, we've gone into yet another 50% drawdown with this business. And that's partially deserved due to market share losses and whatnot, and partially undeserved in my opinion. But at the same time, this was a company that was trading north of a 40 PE, currently trading at roughly a low 20s trailing PE. So there's been a huge amount of multiple compression that has came with that as well. And so to kind of address the elephant in the room, can AI actually kill this business? Or in other words, what would it take for it to materially affect Adobe's business? And to do that, I think it would be really important to kind of define who the customer of Adobe is. Obviously, we all kind of imagine it's like creative professionals or YouTubers and stuff like that. I don't actually use Adobe, funnily enough. I use Canva for the thumbnails and stuff like that. But there's a huge cohort of customers of Adobe that are serious professionals. They are graphic designers. They're professionally editing videos. They might be making movies. And so thankfully, after years and years, I believe this is the first time that Adobe actually kind of gave us a breakdown of who their customers are. This is from their most recent 2025 investor presentation. Unfortunately, it doesn't go into great detail in terms of percentages or anything like that, but we do have a sort of visual of who Adobe's customers are, and they break it into 3 different segments. There's the business professionals and consumers, there's marketing professionals, and then there's creative professionals and creators. And so judging by this, I'm not going to bother reading through this entire list of how they kind of subcategorize it, but I would imagine the marketing professionals and the creative professionals, those are sort of your actual people that are using it on a day-to-day for their jobs and stuff like that. The business is paying for their subscription. Whereas the business professionals and consumers, that's individual creativity. So that would be, somebody like me and stuff like that. And so the thing that we could draw for this is that roughly 2/3 or maybe about 70% of Adobe's customers are people who are using it professionally at their job. And so you might naturally assume that Adobe's entire business is under attack if you've only known about Adobe for their subscriptions, which is of course what they're well known for. I don't think I need to sit here and tell you what Photoshop is, but a bit of a misconception is that only about 70% of revenues is actually driven from that segment. They also have this digital experience segment that accounts for roughly 23% of revenues. There's a whole bunch of stuff in here. I believe they're a competitor to Salesforce. There's a whole bunch of marketing automation tools. Analytics is in here. There's a Shopify competitor in the Adobe e-commerce, website building sort of tool that they have in here. So there's a whole bunch of stuff that they have in here that is just completely unrelated to the actual core business, which again, the core business is 70% of total revenues. And then from that 70% of total revenues, I would estimate that about 2/3 of the revenues actually come from literal professionals who are using this on a day-to-day. And so this brings me to my next point. People are over there on Twitter and they see videos like this, where this is completely AI generated. It's just like a woman walking through the streets. It looks pretty good. Obviously, if you have the eye for it, you can kind of tell the movements and the physics are a little bit abnormal, and it's probably AI. You can look at videos like this of a deer kind of walking. Again, if you look at it hard enough, you'll after some time notice that this is probably Gen AI. But these sort of AI tools from Sora or VO, which is Google's AI generating tool. These things have been popping up, and I think they've been available for a good year now. And although this is pretty impressive for, the technology being relatively new, I think this is another example of people kind of seeing something and projecting it out way too much without actually thinking of it from a first principles basis. And that's kind of what I try to promote anytime there's sort of chatter about a company getting disrupted or anything like that. Think of it from a first principles basis. Think of it as what would actually need to occur for customers to seriously start considering canceling their Adobe membership and moving over to an alternative. The same example and the same line of thinking I use when I considered my Uber position in December of last year at around $60 per share. What would it actually take for a robotaxi company, not necessarily Tesla or Google or Waymo or whoever, but what would it take for a competitor to take away 160 million monthly active users across 10,000 cities, transacting 11 billion times per year? And the answer to that was they would need an absurd amount of capital and an absurd amount of scale, built over 15 years of cumulative losses in a zero interest environment. Obviously, we know how the Uber situation is. Obviously, we're still going through it, but we know how it's kind of turned out. And I think the market kind of woke up to the realization that Uber is probably not getting disrupted. Now, in the case of Adobe, if we kind of follow the same line of thinking, sure, this is great. We can generate AI videos. That's absolutely just fantastic, right? What would it take for a customer to literally cancel their Adobe membership and their Adobe subscription and switch over and start using Sora as their primary method of creating like an ad or creating a short clip, a video, whatever the case may be, right? And I think with the way the technology is, I don't think it would ever be super polished to the point where you can just type something into GPT or type something into Gemini and just have it spit out a video and boom, that's perfect. Let's just post it, right? There's an element of having autonomy over actually adjusting the fine details of it. If you've ever talked to someone who's done any sort of graphic design work, I could tell you, me with just creating the thumbnails, you know what, I'll show you guys. These are all my thumbnails that I've made over, I don't know, probably the past year or so. And as you can see, there's a lot of them. And there's a lot of like A/B testing that goes on. There's a lot of creating similar thumbnails that goes on. Maybe have the flame or not have the flame and stuff like that, right? With this comparison video that I made, actually probably right around, I don't know, a year ago, I had different positioning for all the different logos. I had this one with a little bit of gold highlighting behind it. I made this one where the FinChat logo is a little bit bigger than all the other ones, right? So there's a lot of fine tuning that goes on, and stuff like this, you could probably get like a decent draft out of a GPT. Even I'm saying 3 years down the line, 5 years down the line, when it becomes super polished, all that great stuff, right? And the prompting and all that gets sorted out. There's still probably an element of needing to bring it into an Adobe, a Canva, whatever the case may be, and having to fine tune it. And again, going back to it, you have roughly 2/3 of users being professionals, literal professionals that are using it in the day-to-day. And again, the end sort of person that is actually paying for it is the business itself. They just kind of buy that subscription because it's the industry standard, similar to like the Excel and the Microsoft Office suite. Wouldn't you think that in a world where AI becomes seriously competitive, would they end up completely canceling their Adobe subscription that all their designers have gotten used to and they know how to use, they know all the shortcuts, it's super integral to their workflow, all that great stuff? Would they completely get rid of that and rely solely on a new sort of technology that's a bit iffy? We don't know if it can actually generate consistent results. Or what's more likely is that they'll probably use that new technology to complement Adobe. And I was kind of thinking up an analogy because I always love giving analogies for these type of things because I think it ties everything in together, for better or for worse. But I was thinking it could be like a kitchen. Now stay with me, where, you could have some foods that are made at some other place. Maybe there's some chefs involved that they create the food, whatever the case may be. Maybe you Uber Eats some groceries to your kitchen. The point is, eventually, no matter how the ingredients are made or where they're from, they eventually end up in the centralized kitchen where it's put together and the finished product comes out. And in a world where AI becomes seriously competitive and it gets seriously integrated into the workflows of design of millions and millions of designers, I should say tens of millions of designers around the world, I would imagine the more likely scenario is that they keep the Adobe subscription that they've had for the past 20, 30 years that the industry has relied on. It's the industry standard with a verb mode, Photoshop, all that great stuff. And then sitting on top of that is an AI tool from a Sora, a VO, Figma, whatever they have, right? Like they would probably draft an ad or whatever it is that they're working on, and then they would bring it into Adobe and kind of do the fine tuning, maybe adjust the font a little bit, lower the size of the icon that they're including in there. Again, thinking at this from a first principles basis, that's probably what's going to happen. And GPT isn't some new technology. This thing has been around since, like November of 2022. And as it stands currently on a revenue basis, and that's pretty important, I'll come back to it in a second. On a revenue basis, Adobe is still by far the most dominant creative design tool or creative software that there is in the market. They hold, roughly 70% market share. And you have competitors like Canva that I personally use. They're only 4% of the market. And that's a company that has been steamrolling through the industry and has gotten a huge amount of traction, right? And so even though like it's a very super fast growing business, there's a lot of people using it, at the end of the day, the amount of overlap that that business seems to have within Adobe is that smaller sort of business professionals and consumer segment that I mentioned at the start of the video. And again, this data is also backed up by the fact that like the business is still growing at a pretty decent pace. They're averaging, roughly like an 12% revenue growth rate over the past roughly 3 years. It's not like the business is in decline and like there's clear market share being taken. It's not like something like PayPal where, their revenue growth is like just barely hovering above 0%. It's just straight down. A couple more quarters here and it might dip into the negatives, right? And so overall, I'm not too worried about Adobe's moat. Is it going to grow at 20% plus for the foreseeable future? No, probably not. I think we're at a much more mature stage with Adobe. But at the same time, it doesn't seem like they're losing much ground to new competitors. Granted, I should mention that while we are looking at the market share on a revenue basis, that does miss the fact that a lot of users, such as myself, are on the free tier of Canva. And that has always been like a sticking point for me personally, is that I think there's a huge percentage of growing revenues that a Canva or a Figma on the free tier has taken away from Adobe. What I mean by that is, in the past, call it, 7 years ago, if I was a YouTuber, then I would have to probably use Adobe's products to edit my videos, make the thumbnails, all that great stuff. But because we have Canva today, I know Canva was around back then, by the way, but it wasn't as popular, it wasn't as good. But because we have Canva today, it's a good enough solution for me to not pay $30 per month. So I'm sure there's a huge percentage of this pink section, people who would have previously had to use Adobe, but then now are using the good enough solutions in a Canva, DaVinci Resolve, whatever the case may be, right? But at the same time, like, these aren't new competitors. They've been around for a pretty long time. And at the end of the day, even if they were to like take the entire market share of Adobe within that segment, this is probably around 15% of total revenues. It's not like the business goes to zero overnight. You know what I mean? And so to summarize my thoughts, I think Adobe is for sure feeling a bit of uncertainty. I think I'll definitely leave it with that. Like I definitely can't deny the fact that AI brings an element of uncertainty. Same thing with Google, same thing with Uber and all those type of companies. But I think as investors, we often read in between the lines too much and we start to overthink the behavior of customers and consumers. Odds are most people, if you work at a marketing agency or whatever, you're just going to keep paying for the 10 subscriptions of Adobe, because even if your employees use it a little bit, it's integral and mission critical to your business operations. You need it to be able to do your business day in and day out. If you're hiring somebody new, it's the industry standard. Odds are in university or college, they've probably been using Adobe products and have learned how to use Adobe products, right? Same sort of deal with a Microsoft Excel, where, of course, we have tools that are much better than Excel. We have straight up CRM systems that probably could better track the things that businesses need. But at the end of the day, Microsoft Excel is the industry standard and lots of people still pay for it, right? And so to kind of finish off the video here, I just want to give like a rough idea into where we are in terms of valuation with the business. Yes, the revenue growth has slowed down significantly over the past couple of years. But do you know what else is down a lot? The multiple of the business. It's trading at 23 times trailing PE and 16 times forward earnings. If we want to look at it on a free cash flow basis, same story. If we want to look at it on EV to EBIT, which is my preferred method of valuation. By the way, I get a bunch of comments on that from time to time. The reason I like operating income or EBIT is it strips out everything below the operating line, which can be pretty volatile with deferred taxes and you get random like interest lines that kind of hit the net income figure. You have equity investments that can kind of sway the earnings up and down. So there's a bunch of random stuff that can hit the net income line and that doesn't hit the operating income line. No one method of valuation is perfect, by the way, but this is just the most consistent one that covers the largest umbrella of stocks in my personal opinion. And so if we look at it on, EV to EBIT or PE, they're roughly the same. We're significantly below the median line over the past decade. Adobe typically trades at a 40 times operating income multiple. Currently, they're trading at their lowest over the past decade, hovering around 18 times EV to EBIT. And rightfully so, right? Like the growth has definitely slowed down compared to the past decade. And then in addition to that, there's a lot of uncertainty with the business. But with all that taken into consideration, is the stock still undervalued relative to the depressed multiple? I would have to say yes. What I've done here is in my spreadsheet is I kind of do like a cross comparison of all the different companies, sort of dividing the multiple they trade at by the growth rate to get like a almost a PEG ratio, so price to earnings growth ratio, but I do it with operating income. And so in the case of Adobe, if they're growing revenues roughly 11, 12-ish%, a little bit of margin expansion, a little bit of buybacks, you could easily walk your way towards 15% operating income growth. But just to be conservative, I'm going to do 13%. And if we do 13%, you'll see it lights up green. And in my opinion, it's one of the most undervalued businesses in my investable universe. It's right up there with, Uber, ASML, a little bit ahead of FICO, trading at 1.5 times EBIT to growth. I think you're getting this business at a very reasonable price, even considering all the risks and the uncertainty that comes with the business. Now, with that being said, am I personally buying shares? No, probably not. If we head over to my portfolio, as it stands currently, I already have pretty sizable positions in both Uber and Google. Those are sort of my getting disrupted by AI plays. And so far, both of them have been great, by the way. Like I'm up, 30-ish% on both of them. If we take a look, yeah, I'm up 40% on Uber and I'm up 30% on Google. And I think Adobe from this point on, like it can very easily do well as well. But just the way that I have the portfolio structured at the moment, I'm probably not going to participate in the rally of the stock. And in addition to that, like I would rather just keep everything sort of concentrated. And like for similar sort of growth prospects, even at all-time highs with Google, I could probably buy Google at like similar growth to valuation, similar valuation to growth levels. But yeah, to kind of close out my thoughts on this, and of course, as always, none of this is financial advice. I do believe the stock can do really well from here. I think given everything we've covered, the fact that most of the business isn't actually under threat from AI, the fact that they have that reoccurring subscription revenue, I think there's a world where, we look back 6 months, 12 months from now, the stock has re-rated to a 30 PE, 30, 35 PE, like it kind of normally trades at, given the subscription premium. The narrative has kind of shifted around the business. They've started to do better. It's become a little bit more clear that AI is actually more of a complement to their business than being an outright replacement. And that's just a very lazy narrative to begin with, by the way. Just kind of seeing some Sora videos on Twitter and calling it a day. Oh, well, this can do what Adobe does. Let's just project out a couple years and it'll completely replace Adobe. It's a bit lazy. The fact is, a lot of people still are probably going to rely on Adobe to get the bulk of their work done. So I think given everything we've covered so far, given the valuation that the company trades at, given that it's growing still pretty well, I wouldn't be surprised if we look back 12 months from now, stock's up 60, 70%, whatever the case may be. So there you have it. Thank you very much for watching. If you enjoyed the video, the only way to support me is for the price of a coffee. You can come hang out with me, and I think we have 270 investors on the Discord now. There's exclusive videos in here. You could ask me questions. You could suggest videos. Whole bunch of content in here. A lot of people doing individual stock deep dives into a variety of different companies. Great little community that we've built up over the past little bit. Link for that is in the description. We'd be more than happy to have you in our community. And also, if you want to see me cover a similar video that I made a couple days ago, talking about just the overall software landscape and if AI is, affecting software companies as a whole, that video will be on screen now. Thank you very much for watching. Have a great day.